Welcome to my channel. I'm Dr. Romano. In today's video, we're going to give an update on the stock market and the market for the next month or so. I'm going to give my predictions as well as my analysis of the market today. As you know, in other videos, I primarily focus on the SPX because the SPX is a great indicator of the Fortune 500 companies and their standing and position in today's market. Now you have to remember the summer months, particularly between mid-July and mid-August, it's a little slow. You'll notice since December 31st of 2021, the markets have been declining and it seems like it finally hit a bottom. As I mentioned in other videos, that bottom would be between mid-July and mid-August, no later than the first week of September. Now you have to remember that interest rates are going to change again that first week of September, around that time period. And that is a crucial time period because so far we know they're going to increase interest rates, and if you look at the big picture, they have to, because if China is pulling out of our government's debt, then who's going to buy it? And so what that happens is they have to increase that interest rate so that banks sell CDs and bonds, etc. Our government is so resilient, it will never ever default on its loan because all they have to do is continue to print money to pay for the interest. And in 50 years, that $30 trillion will be much less in value because of inflation and how everything goes up. You also have to remember that there are cycles out there, and these cycles play a major role in our markets. For example, when there's a global war, interest rates go down very low so that the government can print money at a cheaper rate and afford to buy the various equipment for the war. But as you see now, it's kind of odd that interest rates are going through the roof. They have to go through the roof because this time around, our government is heavily indebted. But of course, compared to what our government is and how big they are, it's not a lot of money. Why do I say it's not a lot of money? Well, compared to the average American, we spend a lot. And compared to the rest of the world, where the people don't really spend a lot, they're still kind of in the savings mode that we were in the 1950s. For example, when you speak to your grandparents, they were always saving money. If they bought a dishwasher, it was one dishwasher in their whole life. If it was a car, it was like their first car and only car. So things are very different now. We revolve on credit. And so, in order for a country to revolve on credit, the government always has to print a lot of money, so there's a lot of money in circulation. Of course, those of you who think that China owns America, it isn't true. Okay? Actually, Japan and other countries own a lot of debt. And the reason why they buy American debt is because our government is so resilient to change when it has to. And of course, look what's happening now. They're raising interest rates. Please remember, before we continue the video, if you want to say thank you, Anthony, do thumbs up. It's right there. It's a simple thing, just press the button to say thank you, and that will let me know that you like this video and the content so I can make future videos on this information. Thank you so much. You will be able to put your money in a savings account and earn a great deal of interest. Why was interest rates so low? Well, we had a war since George Bush and Obama era. Why interest rates also went down, and that was because a president in the mid-1990s, he ran on the ideology that everyone should own their own home and every person should go to college. So they closed down basically the trade schools and everyone went on the bandwagon to go to college and own your own house. But what does that do when a government changes it? It creates havoc in our real estate market, in our student loan market. Look, everyone's indebted. by student loans, not just their car payment or their house payment, but they're really in debt compared to the rest of the world. But you don't need to worry about that because our government always has a plan. And so the status of our stock market is actually pretty good right now. It's at a pretty good level where it's very low compared to what it was last year. And if you calculate how much the stock market went down in 2020, it actually went down almost the same. So since January of this year to mid-July, approximately, it pretty much went down the same. Now, what I couldn't understand is last August of 2021, I did my analysis and I predicted the stock market to collapse around this time. But when I see these predictions and these numbers change and the values of everything, I don't know what type of collapse it's going to be. In my mind, when I see a big change happening, I thought that maybe it would collapse over one day. But you see, it has been collapsing. And this is what makes sense with the volatility, because all this year, basically, I couldn't understand why the volatility was so low. Because if we were expected to have a collapse, then you would notice the volatility start to go higher, and a lot of companies make major changes. However, companies started doing really good in the markets, and they started hiring, and they started to expand. Because the markets were kind of suppressed in 2020 because of the pandemic. And so it changed a lot of stuff where certain markets were stagnant, other markets increased a lot, and where markets that didn't really have any business back in 2020, now they're doing too much business because of that imbalance. And it had nothing to do with giving people a lot of money. Honestly, that wasn't a lot what they gave us too. It was like basically not paying taxes for a year or two. Of course, if you don't pay taxes for 2 years and you're allowed to keep that money, yeah, it's going to prop up the market. It's going to prop up the market in certain areas such as travel, vacations, home building, home purchasing, and it certainly did. But now, home building sector is actually decreasing. The products are going down finally. So that's what I couldn't understand, why the volatility was so low. But now we see over almost 8 months of the markets coming down. That makes perfect sense. That's why I saw the move in August of last year. That was 2021. I posted a video on YouTube. You could look at one of my first videos, and I probably go over what I had seen and the prediction that I made by the summer of 2022, the stock market would be at its lowest. However, I'm not happy with the situation right now because I still feel like it's going to go down. But you have to remember, when there's other bubbles happening, that also affects the stock market. And it's just right now a lot of things that are happening. We're not sure what's going to happen with China and the US and Taiwan. We know what's happening with Russia and Ukraine. Russia wants the oil in the sea. That particular area that they want has the largest oil deposit there is. I don't know if you know that. And yes, we're focusing on trying to go green, but those other countries such as China and Russia, they have no interest in going green. And so they will be using oil to fund their projects, to make electricity, to fund their cars, etc. You have to remember that owning an electric car is very expensive. It's not cheap. And the technology is not there to have a cheap car yet. So in places where the economy and the level of income is much lower, like let's say South America, Africa, those countries, they buy used cars from the world and they ship it to their countries even after 20 years. So your car, even after 20 years, is still being used in another country. Europe and America and Canada is very small compared to the rest of the world that still needs gasoline to fuel their cars. They still need coal to run their power plants. They're not as advanced like France and the Scandinavian countries who have been producing clean nuclear. Whereas China, they're still buying coal from Australia and so forth. And so there's a lot of money to be made in the battery sector and the automobile sector for electric cars, but that's going to take a very long time. And so to say that oil is going to go away, no. It's not going away in our generation. Maybe in 50 years, okay. In 50 years, basically, the cars that were sold from America and they were shipped elsewhere, maybe, but probably places like Cuba will still use gas. Now, and of course, places like other countries, Sri Lanka and every other country out there except the European nations and America. And so that's particularly a very important thing to think about. That's why Warren Buffett, he continues to buy oil stocks and own a great chunk of oil in his portfolio. He was not stupid. You see, Warren Buffett not only owns the oil transportation industry in America for the train carts, but he also makes those train carts. So he knew that oil was not going away. For some odd reason, I don't know why the US government doesn't want to produce oil in our country, even though we need it. It's one thing to try to have a cleaner environment, and that's really important, but you can't force it on us and make us pay high prices for everything. Because, for example, the Chevy Suburbans are not electric yet. Secondly, even if they are, I can't buy one. What if I want to drive 5 hours in a day? That's my take on the markets as of now. We must prepare for the first week of September and the end of October. I believe that it will go up until the first week of September, and then after the first week of September, it will take a pullback, of course. It will probably trade sideways. And then you have to be careful at the last week of October. Something else is going to happen, and it will probably take another pullback after the first week of November. So figure the last week of October to the first week of November, the stock market will take a pullback. But then after that, we are in smooth territory until the end of the year. So if you want to buy, let's say, Bitcoin, buy it now, and then remember to sell it around Christmas week before the end of the year. And so that's my market prediction. You need to be very careful for the first week of September. I would say the last week of August to the first week of September, around that time period. And then after that, you can enter the markets and you'll probably do very well until the end of October, the first week of November. And then after that, you will have smooth sailing until the last week of December of 2022. I want to thank you so much. Please remember, if you like my channel, to subscribe to my channel, future videos. And if you want to do thumbs up and say thank you, Anthony, you're more than welcome to. And if you have any questions, send it to live chat. I want to thank you so much for watching.